Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Monday, May 11th, 2026, and we're here to kick off your week with some fresh insights from yesterday's market chatter.
That's right, Ethan. We've had a busy weekend sifting through a significant volume of online discussions. Our AI flagged quite a few different stock symbols, generating a lot of buzz.
Absolutely, Brooke. The sentiment out there seems to be a real mixed bag this week. We're seeing some intensely bullish enthusiasm, especially in the tech and AI space, with users practically shouting about potential gains.
And on the flip side, while there's optimism, our KPIs are flashing some serious warning signs for others. It's a classic dance between high growth potential and necessary risk management. Let's dig in.
First up today, let's talk about Rocket Lab Corporation, RKLB. The community sentiment here is overwhelmingly bullish, folks. There's a lot of chatter about RKLB getting wrecked if you bet against it, with a strong belief that the upcoming SpaceX ITO in June will give it a massive boost. They're seeing record Q1 revenue, a huge backlog, and a narrative shift that RKLB is more than just launches now.
Well, Ethan, while that sounds exciting, the KPIs for RKLB are flashing bright red for me. The stock is currently trading practically at its 52-week high, which, sure, indicates strong performance, but it also means a lot of that optimism is already priced in. More critically, we're looking at a net profit margin of negative 0.26872 and an EPS of negative 0.32. This company isn't profitable right now. And get this, the price-to-book ratio is an astonishing 33.31. That's extremely high, especially for an unprofitable company. Plus, we've seen significant insider selling, over 71% net shares sold by insiders in the last 6 months. It doesn't look like those closest to the company are as bullish on the current valuation.
But Brooke, the news is so positive. Record revenue, securing the biggest launch contract in history, and articles discussing their path to profitability. These events have the potential to directly improve those negative profit margins in the future. And you can't ignore the excitement around the SpaceX IPO.
Potential is one thing, Ethan, but current fundamental reality is another. We've actually rated RKLB as stay away quite a few times in the past, and it seems those underlying profitability and valuation concerns persist despite the operational wins. For me, that high PB coupled with unprofitability and insider selling means RKLB is a stay away right now. The risk just outweighs the current reward.
All right, fair enough. Next, let's talk about advanced micro devices, AMD. The social media buzz is through the roof. Users are celebrating AMD gains and mentioning accumulating shares as it continues to climb. We're talking about a stock that's seen a roughly 350% increase in a year, propelled by massive AI demand.
No doubt, Ethan. AMD has had an incredible run. And yes, the revenue growth is strong at nearly 38%, and insiders have been net buyers, which is a good sign. However, the PE ratio is sitting at a whopping 151.73. That tells me a tremendous amount of future growth is already baked into the current share price. The stock is also very close to its 52-week high, leaving very little room for immediate upside for new money. Even Cathie Wood's ARK Invest has been trimming their position, indicating some caution on current valuation levels.
But the AI boom isn't slowing down. Articles are saying huge growth could still be ahead, and that it's not too late to buy AMD. The demand for server CPUs and their competitive position against NVIDIA is a powerful narrative.
I agree the growth story is compelling, but from a KPI perspective, it's about what's left on the table for new investors at this price. When the PE is that high, you need flawless execution and sustained explosive growth just to justify the current valuation. We've actually often rated AMD as stay away or cautious buy in the past, and given the current valuation, my suggestion is that AMD is a stay away for new money right now.
Moving on, we've got Intel Corporation, NTC. It's not seeing as much direct user discussion as AMD or RKLB today, but it's definitely a player in the chip space. There's a battle for AI supremacy with AMD, and any wins there could be huge. We are seeing a slight degree of insider confidence too, with some net purchases.
Ethan, the silence around Intel from users might be telling. Their KPIs are quite concerning. We're looking at a net profit margin of negative 0.059 and negative earnings per share of negative 0.6. Intel is simply not profitable right now. What's more, their debt-to-equity ratio is an extremely high 36.028, signaling heavy financial leverage. Despite these challenges, the price-to-book ratio is still over 5.45, which seems like a premium for a company facing such fundamental headwinds.
But if they can pivot effectively into the AI market, as suggested by news articles comparing them to AMD, those numbers could eventually turn around, right?
They've shown a significant surge from their 52-week low this past year. They could, but that's a big if, and the current financial health presents considerable risk. We've consistently flagged Intel as a stay away in our past ratings. Given the unprofitability and massive debt load, I'm maintaining that Intel is a stay away for now. There's too much uncertainty and risk based on the current metrics. Let's shift gears to Micron technology, MU. Now, this one is pure exuberance in the community. MU stock equals mega up stock, according to users, with comments like, "It's pumping already, let's go." This stock is riding the AI memory supercycle and has reportedly been up 700% over the past year. Okay, Ethan, I'll admit, MU presents a more interesting picture. While it's trading at its 52-week high, which usually gives me pause, the PEG ratio is a remarkable 0.26. That suggests that even with a PE of around 35, the stock is potentially undervalued relative to its expected earnings growth. And crucially, unlike some of the others, Micron boasts a very strong net profit margin of 0.41486, showing excellent profitability. News of analyst upgrades and the ongoing AI memory supercycle also support this. Right? This is exactly what we look for. Strong momentum, incredible growth story, and the numbers, particularly that PEG ratio, actually support the current valuation and future potential. This isn't just hype, there's substance here. We've given MU buy ratings frequently in the past, and I think it's time to go back to it. I concur. The strong profitability and that very low PEG ratio are compelling. This is a case where the forward-looking metrics align with the excitement. So for MU, it's a buy. And finally, we have Photonics, PLAB. There was a highly bullish deep dive post predicting a 3x return by year-end, touting its unique market position as a TSMC supplier, financial stability, and no debt.
But the community quickly pushed back, Ethan. Many comments called it a top signal because the stock has already run up significantly. Critically, some users challenged the core financial claims about mask set costs, suggesting the revenue potential might be vastly overstated. And while the original post claims no debt, we also saw significant insider selling, over 7% of total insider shares sold in the last 6 months. That's a red flag. The stock is at its 52-week high, and its PEG ratio is 2.64, with only 6.1% revenue growth, indicating it could be very overvalued for its current growth rate.
So the optimism is there from some, but the underlying numbers and market sentiment are heavily contested. This is the first time we've discussed PLAB on the show.
Exactly. Given the timing skepticism, the challenge to fundamental figures, and those insider sales, it's too risky. For PLAB, it's a stay away.
All right, let's wrap up our daily hunt for multibaggers for today. Here are our top candidates for deeper analysis. Investigate as buy, Micron Technology Inc., MU. Investigate as cautious buy, none. Investigate as speculative gamble, Rocket Lab Corporation, RKLB.
And that's our AI-generated market commentary for today.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for tuning in to the Daily Hunt for Multibaggers.
We'll catch you next time.